You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good morning, everybody. Quasar Markets Live. Here it is on a Tuesday morning, and I've got my friend Scott Bauer, Mr. Options himself, live from Chicago. Scott, let's get right to it. It is Amazon Prime Day. Talk to me, man. Are you buying anything today?
Oh, yeah. I've been up for hours scouring. No, actually, there are a few things I'm looking for. There's no question that some of the things that I wanted to buy over the last week or so, I legitimately and purposefully waited just to see what would happen with prices today, and haven't really seen anything significant yet for what I'm looking for, but I'm still hopeful.
Yeah, and it's interesting. I made a post the other day this morning about Amazon's sales. If I told you that Amazon sales in 2015, and I think I'm going to present this page so everybody can see it. I'll share my screen. There you go. In 2015, only 10 years ago, Amazon Prime sales were less than $1 billion. Last year alone, in 2025, they're expecting it to be $23.8 billion, 23 times what the numbers were, almost 24 times in 2015. And we're also seeing it from the perspective of Walmart doing the same thing, right? They're having their own, but when this all started, it all started in China, right? It was Singles Day in Alibaba, and Amazon set foot with doing the same thing, calling it Prime Day, Walmart calling it their days. And it went from 1 day now to 2 days to now the 8th to the 11th, 3 days now. Is there a reason why they're doing that, Scott? Are they hurting, or is it just that they're doing so well that this is what we're going to do?
I think it's a combination, and not that they're hurting. A, they are doing really well, but B, I think they absolutely realize the whole backdrop of the tariff situation here, and they want to probably front load some sales. There's no question, even though we're 3-4 months into this right now, there's no question that the largest online retailer, I'm not sure if they're a bigger retailer than Walmart is, but the largest online retailer out there, they obviously must have some concerns as well in terms of tariffs. So that's, in my opinion, why they extended this a few days.
Yeah, when you talk about tariffs, I've been talking about on our show here that my question has been about clarity. I'm not seeing any clarity on several things. Obviously, Israel, Hamas. Obviously, the tariffs issues come back in. We're seeing now oil issues. We're seeing geopolitical still going on in China, Russia, and Ukraine, and now possibly Russia gearing for Estonia now to attack. I mean, the markets have had a nice run here over the last 3 to 6 months. I think you and I both called that quite clearly. But what are you thinking about for the next 3 to 6 months?
Caution. Really. Okay. I think there's way too much complacency out there. Yes, I know it's summer trade. This is typical of being in the heart of summer. There is way too much. And you just mentioned, most of the things that are on my radar as well. There is way too much complacency out there, Steve. Listen, if you, somebody, a retail trader, an investor, whatever it is, you want to stay in the market because you think we're bullish and we're going higher, great. I have no problem with that. I'm doing that as well. But I am also at the same time buying protection for my portfolio because it is very cheap right now. We all want to go out when it's time to re-up our insurance policies, let's say your auto insurance, homeowners, and you shop around, you try and find the best deal. Well, I really think that volatility right now is on sale. Again, whether it is upside VIX, downside protection in the Qs, the S&Ps, whatever it is, I think vol is too cheap going into earnings season, going into the Fed, going into the tariff situation, and then, the geopolitical risk, which has unfortunately not gone away.
Yeah, of course. And so, as an options trader, I have been saying it myself. I mean, both of us are long-term options traders, you wrote the book pretty much on it. I have been laying off of options over the last 2 months. And that is not a normal position for me. Normally, I'm hedging with options. I'm playing options the normal way, not the single zero DTEs, things of that nature. But lately, I haven't traded options at all. And my portfolio over the last month, my trading portfolio, I should say, is up 64% in trading. And is that a good way of slowing down my risk, or am I making a mistake by not playing the options right now? Is it still the place to be?
So I'm not going to tell you that you're making a mistake. You're up 64%. You're obviously doing something right, and you have to do what is comfortable for you. Everybody, whether
Right.
you're just a one lot, two lot retail trader, or whether you really dive into day trading, you have to always be at the size that is comfortable for you. So I'm never going to say, "Oh man, you are missing out," or "This is a great time." What I would say, it is a little bit slower right now. It probably has been for the last 4 weeks. However, there are still some really excellent opportunities out there that we've been able to take advantage of, both from a directional standpoint and from a volatility standpoint, looking at implied volatility.
And implied volatility, I mean, we talk about the summer. You just mentioned that. We call it in the markets, professionals call it the doldrums of the summer. Talk to me a little bit. Is this a normal summer, or is this a summer that we need to be a little bit more cautious, or a little bit more eyes on the ball than the last few summers?
So from volume, it's a pretty normal summer. I mean, volume's way down, where regardless of where you look. But what's not normal is, as I mentioned earlier, we will typically see the VIX 12, 13. We see it really depressed in the summer months because people are on vacation, then the volumes are down. Here, the VIX of 17 right now, which historically is elevated, but for me right now, that is really cheap, given all the backdrop of everything that can happen out there. So in that sense, I think the summer is not normal. In the sense of volumes, yes, I think that is very normal. But you know what, Steve? We have earnings picking up this week, and the big banks start next week. And I think that can really kind of set the stage for what happens over the next couple months, because we know in the last earnings cycle, we saw, every company come out, regardless of the sector, talk about guidance or lack thereof because of the tariff uncertainty. I think we're going to get a lot more of that right now. And the more we see that, I think the more difficult the market is going to be.
Yeah, the headline just came across. The S&P 500, the year-end target there from Bank of America was raised to literally 6,300 from 5,600. That's a huge raise. But on the flip side of that, Stifel says that we're going to see a 12% cut in the markets.
And Goldman just came out also earlier this morning and said up 11% by the end of next year, 1 year. So, you have these mixed calls out there. I don't pay a lot of attention to the big brokerage houses, because they'll come out in 3 days and change their tune.
Like the Atlanta Fed sometimes.
Yeah.
All right, let's get to it. Scott, look, on my radar, I've got Bitcoin almost at 109 again. I've been asked several times. I know Howard's on vacation this week, but what are you looking to do? I mean, are you still long Bitcoin? Are you short Bitcoin? Are you playing Bitcoin at all?
I am still long it, but that's just position that I've had that I really don't trade. I'm not actively trading it. There are levels that I'm looking at. My next buy level, quite frankly, isn't until down around 75. So I'm probably not going to be active anytime soon on the buy side. I really think that, given the consolidation that we have seen recently and pushing the upper end of that range at the 109 level or so, I think we're ready for a breakout to new all-time highs.
All right, I love that. I love to hear that. Okay, let's talk about all-time highs. We're not seeing it at all. Like crude futures, oil down there in the pits. We talked about that for decades, about oil, and it has been, for me, always about the crack spread, what it costs to crack that sucker up. Right now, unfortunately, we're not seeing a lot of oil, and even with OPEC saying we're gonna increase oil, We're at 67.74 barrel. Not a lot there in oil. Are you playing the oil markets at all either?
I am, and I've played it from the short side.
Yeah.
Meaning that I'm not buying dips, I'm selling rallies. And I've been doing this for the last several months because I truly believe, given the backdrop of everything, including the risk of the geopolitical events, which is really that's what made oil pop, 4 weeks ago, whatever it was. Truly, when you talk about supply and demand, right, and you look at the fundamentals of the oil market, there is major supply. Demand is still really waning, even though there's some positive numbers, which I don't believe, coming out of China recently,
Yep.
with demand potentially picking up there. There is still a huge imbalance of supply and demand. And to me, without any, major extraneous situation, and that could be a geopolitical event, oil is a sell. So that's why I've been selling every rally.
All right, look at that. I like that. All right, let's talk about mommy and daddy a little bit. Looks like Elon Musk and Donald Trump have been fighting still. They just can't get along, and now one of them is deranged. I can't tell you which one. They both said they're both deranged. One of them started a political party. One of them cut their EV bill, their big beautiful bill. We have seen Tesla drop about $80 billion worth over the last few days. Is this a marker that we should be looking at from more of a bigger picture, or is it just a meme stock? Tesla now becomes a meme stock again. I've heard that. Or is Tesla starting to become the poster child of what not to do with the president? So talk to me a little bit about Tesla.
I don't think it's a meme stock.
Okay.
I also don't believe that it is a $500-600 stock.
Right.
It's a great trading stock. It's a great trading stock because of the volatility between the two of those guys. And there are levels, there are ranges here that we've seen Tesla trade on. I'm going to call it the quarrel news between the two of them. So I am trading it. I am not investing in it. I don't have a long-term view, but I think it's been a fantastic trader. But I will say, Steve, it makes for great headlines. It makes for great news. And if anybody wanted to promote a battle royale between the two of them in a steel cage match, boy, that could be the biggest sellout pay-per-view audience in the history.
Yeah, I mean, can somebody call Joe Rogan for us?
Exactly.
Look, I mean, you're totally right. I mean, if you look at this is the weekly chart. I've been looking at this for a little while, and this is why I've kind of been saying, hey, look at this line. I mean, it's typical of the markets, right? I mean, it's creating a wedge. Boom! Look at that.
Yeah, there's no question about it. And at some point that'll break. But for right now, the trade has been very, very solid in Tesla. If you don't have an opinion of, okay, God, the stock's going to break out over 350 or it's going to bust down below 270. If you can trade what the market is giving you right now, you can be pretty successful.
Yeah. And how are you going to trade it? If Elon says, I'm still creating the America Party, are you going to join the America Party?
I don't know about that. I'm on my own party. I don't know about the America Party here. Can't we all just get along?
Exactly. I agree with it. Look, okay, let's get to it. We'll stop screen here and I'll connect back in. We are looking at, you are right there in Chicago. You are in the building itself with the VIX pit itself.
Yep.
Talk to us about what the traders down there are looking at and thinking. It seems to me that the VXX has been all over the map, the VIX pit itself. One day it's way up, the next day it's way down. They can't find a direction. In fact, I believe you're looking at the VIX pit. If you look behind Scott, for those of you who are out there, you look behind his picture behind you. Off to his left shoulder is where the VIX pit is. That's the S&P pit you're seeing now behind me, behind you. Talk to me what the traders down there are thinking about this summer.
The traders are to every person I've spoken with, including the brokers, all believe that volatility is too cheap. A lot of the trade that is going on that happens in the pit, I'm not talking about the electronic trade. A lot of what is trading right now in the pit is trading at what the traders and the brokers call fair value, meaning
Right.
that a lot of the traders don't want to participate because they're not getting any edge, theoretical value edge to the trades that are going on. So there's a lot of institutional play right now in the VIX where, big firms, big hedge funds, institutional players are just taking the trade down to satisfy their customer.
Yeah.
So when you see a ton of this volume here in the VIX, a lot of it is just being traded, let's call it up in cyberspace, not actually being trading on the floor. But the sentiment is that nobody wants to be short units. Short units meaning, they're expecting a big move in the VIX, whether it's in 2 weeks, 6 weeks, 12 weeks, whatever it is.
Yeah, and we all know that the VIX normally around 16 is about where the buys is. I think that's what we continue to talk about here on the show, and I think you talk about it too. In the past, we've seen it get as low as 14 and 13, but I think you're right. You can also see the same thing. This is a daily chart of the VIX itself, same situation. You can also see it's also creating a bottom here too as well. Yeah, and
keep in mind also the VIX of 16, which you just referenced, that's equivalent to basically a 1% daily move in the S&P 500, a VIX of 16. So if you just looked at that correlation right there, I think you could look at that and say, yeah, VIX is too cheap.
Yeah, and if I can quote Scott Bauer, you buy volatility when you can, not when you have to.
Boom, you got it.
Yeah.
You got it.
So for those people that are getting a little, and I think we talked about it several times now, even on the show here, is the complacency in the market that you need to be careful. Now, Scott, I'm on probably the opposite of most people in the markets right now. I'm on the downside. I think there's too much complacency for me. And if the VIX does jump, I think I'd rather be on the short side of things than on the long side of things. But it does seem that there are still some dip buyers out there. Is that correct?
There's no question. There's no question there are dip buyers, though. It's interesting, Steve, and I think it's human nature because, especially on the retail side of things, you, me, friends, whomever are trading, you may look at the markets or an individual stock and say, okay, if the market gets here, if this stock trades down here, I'm in. But then when you're in the middle of a sell-off, right? And again, this is human nature, and you maybe get a little bit gun shy, a little bit scared, and you back off a little bit and say, oh, no, I'm going to wait. Things don't look so good here. And I think that is still why there is so much cash on the sidelines, even with the markets essentially at all-time highs.
Yeah, and I look at the markets, and you heard it last year saying from Trump, if Biden wins the election, that the markets will crash. If I win it, the markets will be at all-time highs. Markets crashed on him after he got into office, pulled back because of tariffs, and he's saying tariffs again. Are you worried about tariffs at all?
I am, because of the complacency out there and because there's no direction, right? It just seems like one of those situations, one of those policies. And this is no disrespect. This is not being political.
Yeah, sure.
Anybody out there, please don't take it that way. Where literally he wakes up in the morning and he throws a dart at the dartboard and says, okay, what's the policy going to be today? And I think that a lot of people are starting to realize that that's not good for the market, where that unknown is just so front and center. So yes, I am concerned about it.
Okay, so he said to Japan that tariffs are back on August the 1st. He was saying July the 9th. Is that an arbitrary date for you to be playing options at all?
The July 9th or the August 1st?
That's right. That's the same question, right? I mean, I don't know, because he took July the 9th off, and he's now saying, okay, I'm moving everything to August the 1st. 3-4 weeks later, is that a chance to change your rollover, your options? Or are you making
it is, and it's funny because we haven't seen the curve in the VIX really shift yet, moving out. And I would have expected that, given that news, you would have seen a bump up in August or September VIX futures, and there really hasn't been. So, I'm not saying that I'm going to be able to outsmart the market. I don't think anybody can ever outsmart the market, but I've been doing this long enough, almost 35 years, to know, again, when there's opportunity to buy that protection, you do it. You do it. Even if you never use it, fine. fine. It's the cost of doing business, because as you mentioned earlier, when it's on the downside, that's when people start to scramble. That's when people start to really pay up for things. That's not a situation you want to be in.
Right. And what Scott's saying, for those of you who don't understand, is that he's saying to protect your portfolio, to be buying big calls. And if you don't get it and it goes zero, worthless, as we call them, then you can either roll them over or you can pay up for that. And I like to call it insurance. It's protecting your portfolio. So he's saying that I think, don't want to paraphrase Scott, but you're saying that you're okay with mid-August VIX calls. Is that correct?
Yeah, even go out to September a little bit, because I think when you have the ability to buy time cheaply, you want to use that. And we all know that, further you go out in time, the more expensive options get. So the lower that volatility is, the lower that premium is, it lets you buy more time for the cost. So I'm actually looking out to, September or so at this point.
Yeah. Wow. Okay. Let's go. All right. Well, then let's talk about it. Advanced decline right now it's a positive by 1650. So we should have a positive day here, right?
Well, it's setting up for it right now. I mean, the overnight session, futures were down fairly big, about 0.5% last night.
Yeah.
And then, we flipped that here, and things are looking, moderately positive right now. And probably a lot will depend on the news flow today. Is there going to be more tariff news flow? Who knows? If there's not, we probably grind higher. If there is, maybe we give a little back. But it's really too difficult for me to say at any one point here, okay, this is what we're going to do today, because that risk of a tweet, an X post is just, a heartbeat away.
Right. All right. Okay. So talk to me a little bit about Scott Bauer and Prosper Trading. What you guys are doing? What do you guys do? And talk to them about how to find you.
Sure. What do? Myself, our other educators, we are professional traders doing this a long, long time. And we trade live in the markets with our students: options, futures, stocks, crypto. And we're not just trading, but we're teaching during the day. So, anybody, whether you're a beginner, intermediate, whether you're advanced, you're in a place where you are with professionals. And like I said, over the last several weeks, it's been a little bit slower, but there are opportunities. And one of the things we really try and teach our students is the psychological part of trading, because that's such a big part of it, right? You don't always have to be buy, sell, buy, sell, buy, sell, buy, sell, right? People like that because they like getting the adrenaline going, but that's not really necessarily the art of being a good trader. So we are always looking for those opportunities. Personally, I trade on volatility a lot, so I am looking for implied volatility discrepancies. But that's what we are doing. Bell to bell, we are in our live trading rooms with our students, guiding them as to what we're doing in the markets.
And I will put the website into here too as well, so you guys can.
Thank you. It is prospertrading.com.
It is, yep. And I'll have that here for you guys on the. And Scott is actually trading while we're talking, so I'm not gonna bother him while he's doing that too. And there's the website for everybody out there that wants to hit that website up and go click on Scott. I've known Scott a long time. His partner here with Quasar Markets as well. All right, 10-year now sitting at 4.427. The bond market's telling me everything. Scott saying to me that you got to pay up to get. The government needs money, right? So
government needs money. That's right. Supply and demand. And right now there's too much supply, or the demand is waning, and everybody out there who is looking to buy U.S. debt, they're demanding a higher return. So that's, it was just last week, I think we were 4.25 until that jobs report came out. Now we've spiked up 12, 15 basis points or so, and we're getting up to that kind of crucial 4.5 area, which that's another risk for the markets.
Yeah, and I always say the bond traders are the smartest traders, are the ones who have the biggest, widest amount of money, right? And when you look at that perspective, for me, there's a reason why they're pushing up.
Oh
Scott,
yeah.
I always keep my eye on two things when I'm trying to think about the future, and I'm seeing two things. The first I look at is commercials on TV. The first commercials I'm seeing a lot of is gold commercials.
Oh my God.
33.23 now an ounce on gold, and 36.58 now on silver. So we're about 5 minutes away from the open here, but gold and silver was a hot trade for almost 6 months. Now it's not so much. Is that right?
You know what? I think as much as I am a sell the rally in oil, I am a buy the dip in gold. Until that pattern stops, I am a buy the dip in gold. And I don't really see that pattern going away anytime too soon because of all the things that we've already mentioned, because of all the things that could upset our economy, upset the market. So again, any pullback here. In fact, I'm looking at GLD right now. It's down just over a buck pre-market here. If we get down to in GLD 302, 303 area, I'm going to reload again. So I love playing those swings and those patterns, and at some point that pattern will break. I don't think it's here yet for GLD or for
And you
gold.
talk about gold in general. What about gold miners? Is anything different there?
I have not really played the gold miners because GLD has been such a solid trade.
Okay.
It is incredibly, incredibly liquid. The markets are really, really tight. So I haven't really looked at the miners, to be honest with you.
All right, Scott. We got about 5 minutes now to the open. What's your thoughts here for the day?
Well, I'm looking at First Solar, and I love this because we have a nice short position in First Solar. So I want to get those markets open so we can take some partial profits off the table here. What do I think is going to happen here? I think we're going to probably grind higher unless we get some negative tariff news here. The S&P's just off all-time highs. The Dow's taking it on the chin a little bit compared to the other indices right now. But I think it's going to be a very slow day. And I think there will be opportunities on any sort of sell-offs here, like in gold, cybersecurity stocks. I've got my eye on really, really closely. CrowdStrike and Snow, and those are to me like GLD. Those are buy the dip type opportunities.
I like it. And your thought prospect behind CrowdStrike is?
I just think that cybersecurity is going to be the leading sector, not just even for the rest of this year, but all through 2026. I mean, it has grown and grown, and the sector itself probably has 10x to where we are right now, in my opinion, where it can grow. And I always like to trade in the leaders of a particular sector, whether it's in the financials like at Goldman Sachs, JP Morgan, in retail, at Walmart, at Costco, in the cyberspace, Crowd and Snow.
Scott, Pete, our friend Pete Thomas, also in the Chicago Boy out there, was saying he agrees with you in gold as long as 3,300 holds. Is that your thesis as well?
I'm never, ever, ever going to dispute what Pete says about gold, so I'll go with that.
Pete is Mr. Gold. If you do not know, Pete Thomas has been in those markets since literally, I think he was a baby. I think Noah was walking the earth and building an ark at that time. Congrats, Pete. I mean, he's been a great partner here at Quasar Markets here too as well. All right, here we go. We got about 2 minutes now to the open. You're going to get rid of your First Solar? Is that correct?
First Solar, I would love for it to open where the pre-market activity is, right around 167 or so. That would be tremendous for our position. So that's what I was doing actually when you said I was trading earlier. That's what I was doing, was sending out a live signal to our students to prepare a partial exit order. And that's kind of thing that we do here. Even when the markets aren't open, we're obviously watching closely, managing our positions, getting information out to our students.
Yeah. So, on the flip side of that, those of us who haven't been in First Solar, should we be looking at going long here, considering that it's taken such a beating this morning and of course yesterday too as well?
I'm looking for a pullback back to around the 50-day moving average, which is at
Okay.
152-153 area. So I would not get long. Until that, I'm only hopefully taking off some of our put position that we have on just to lock in some profits.
Gotcha. All right, we got about 1 minute out of the open. Here we go. Right now, tick now sitting here at minus 23, so nothing. The markets are quiet as can be. Wow. Very quiet open here so far, so we'll see. Here we go. Got about 30 seconds. 168.50 now on First Solar. 108.9 now on Bitcoin. That handle seems to be rough at the 109 handle, the 109,000.
Got another one right now, Steve. I'll tell you that I'm putting out a partial exit, and we have a short position in Datadog.
Datadog, all right.
On the run up from last week when it was announced they are entering the S&P. We are going to look to take some of those profits off right now. This is a massive, massive pullback here. So I am just getting this partial exit signal out to my students. So if you hear the typing here, please just disregard it. Good morning, everybody. As you can tell, you're listening in. I am on live with Steve Orr and Quasar Markets.
First Solar popping a little bit here, 170.50 now. I did not make that move. I did not pick that up.
Come on, Datadog.
Tesla now up 1.18% here. We're seeing a little bit of a move here. Still in the bond market here now, 4.431. Still pushing higher here. Gold 33.25. Still holding that Pete Thomas 3,300. Tick now literally flat on the day here. Nothing is moving here at this rate.
No, but Datadog being down $7.50 is wonderful here. I will tell you, we also just rolled out. We had a July VIX position on that we just rolled out to September. Datadog filled. Hello. Thank you.
Congrats. Look at that. Live on the air here, folks.
Thank you. And that was only partial position. We got to see what we want to do on the balance here.
Oil still slipping here, 66 now. Looks like 67, 65 now.
Hey, Ken, where were you filled in Datadog? Was it around 280, 290 area? Sorry, I'm 284. There we go. Beautiful. So a spread in Datadog that we bought for $1.40. We're selling out at $3 right now.
And that's what Prosper does for everybody out there. If you don't know, he has a live room and he calls it out and he does it live. So you're seeing it live at Prosper Trading. So click on that button, prospertrading.com. Go check them out. I think this is the
unbelievable job here, guys. And you know what? As we know, bulls and bears prosper, pigs go to the slaughter. I'm putting out a signal to get out of the balance of our Datadog. And we will take our profits and move on.
NVIDIA now up about 0.7% here.
Sorry, Steve, just got to get this out here.
Take your time,
guys, here is our remainder exit. Bulls and bears prosper, pigs go to the slaughter. Don't get caught up here. Take your money and run, right? Is it Steve Miller?
That's right.
Go on, take the money and run. Sorry about that, everybody. Quasar doesn't want to hear me singing.
I don't think anybody does. Well, I mean, there is a song you guys probably sang all weekend. It's Go Cubs Go. Congratulations. It's singing. Yeah.
I was hoping you were going to bring that up at some point.
Of course I was, man. I was disappointed you didn't give me some grief over it. I'm really
no, I wouldn't do that in a professional setting.
Oh, I totally would. Yes, I have no problem with that. Yeah, I'm not seeing anything here in this market here that I'm really liking here that to trade here.
All right, Jack, Pat, you guys are very welcome. Great trade there in D-Dog. Saroon is 3.25, 326. Way to go, guys. Love it. In, out, boom, boom, boom. Sorry, Steve, got to talk to them here for a
Oh
second.
man, good start too.
Don't forget, everybody, if you were not stopped out in XYZ yesterday, you still have that out there. See, that's another thing we do, Steve. We are always managing our positions here. So we use stops, we use OCO orders. You know, we're trading as we were down on the trading floor, but bringing that to the retail side. So there's some tricks of the trade here that, you know, most retail traders are not maybe aware of, that we help our students out with.
Love it.
All right, there we go. First solar back down to lows of the day. Come on. Danish, very nice fill there.
Man, it's quiet.
It is really quiet. It is really quiet. And
Tesla
it's going to
now.
be like this, unless there's tariff news or some sort of escalation in the Middle East. It's going to be like this.
Tesla up about $4 now.
Yeah. Never hit yesterday. I was looking for the 285, 286 area. I was ready to sell some put spreads there and just never traded down there. But that's still a level that I am looking at. And if you look at in Tesla, if you look at that 285, 286 area, what you'll see is that's kind of some resistance back from April. It became support in the move down early June. So that's why I was specifically looking at that area.
Yeah, Tesla's pushing up a little bit here. Up to 300 now almost. There it is, 300. I have been trading Tesla quite a bit. I haven't touched it yet. There we go.
Bill G, you are very, very welcome. Bill K, you are very, very welcome. Sarunas at 335. I think you are the leader in the clubhouse there. Excellent, excellent job, everybody.
Bitcoin slipping just a wee bit here. 1087 here. Not able to hold that 109 handle there.
Oh, hello, Hims. Hello.
Are you buying? Are you playing Hims? I don't like that. Stop.
Yesterday we bought a call spread. I'll tell you exactly what it is. It is the August 1st expiration 50-57 call spread.
Okay.
We bought that yesterday for a price of $1.45. It's now trading $2.10. We'll look to take some partial profits off, probably around 2.25 or so. You know, one thing we look for, you may have some listeners right now, Steve, that say, why are you taking it off so early here if you're bullish? And that is because we don't look to hit home runs.
That's right.
Put that out there right now. We don't look to hit home runs. I want to be, you tell me, Steve, you're as big of a baseball guy as me. If you think about the best bunters that you had ever seen play baseball, who comes to mind? And it doesn't have to be a Cardinal.
I was going to say, for me, it's Ozzie Smith is the best.
I was going to say Ozzie Smith for you. But I always use the reference of Brett Butler.
Brett Butler. He was Mr. Bunt. Yeah, Brett Butler's Bunt. Yeah.
That's how we teach our students. And that's how you stay alive in this game and live to trade the next day, by just booking those profits and booking those profits out. One of my students just said Lou Brock. Bill, I'll go ahead with that. But
I like that one. Good man. I like that. I like this guy already.
Remember, Lou Brock was a Cub until we made that infamous trade that sank our franchise for a while.
Yes.
No, but in all honesty, we trade here and we grind things out. So, you know, there are so many traders, gurus out there that 95% win rate, right? 98.
Yeah.
If I see that, and I'm getting old now, but I turn around and run as fast as I can from that, because I can trade, and I can trade at a 95% win rate clip also and lose money.
Right.
You know, by selling far out of the money options. And, you know, that's just a bunch of BS to me anyway. So we grind things out here. That's the way we do it.
And I think a lot of people don't really understand that. Like, you know, when people say, oh, I've been in the markets 5 years, I go, I have underwear older than that. Right.
No doubt about that.
Give me a break. You know, like, so, I mean, it takes at least it takes a while and it takes time, and you got to do it every single day. This is not a process where you can just willy-nilly it in the markets.
No.
Yeah.
No. It is, there's so much about trading, having a plan and sticking to it, and being
Yes.
very rigid with your entries and stops. And it's really true. It really is.
Man, the market's quiet. We need some volatility here, my man.
As we speak, I am now putting out a partial exit in our HIMS position from yesterday that we bought at $1.45, and I'm putting out a $2.20 partial exit.
I am still short McDonald's. I still have, my thesis has not changed on it, that people are not eating at McDonald's as much, and real estate there is really hurting on McDonald's. Tick just dropped down from 200 down to minus 134. So,
oh wow. Okay, there we go. And just so everybody knows what I'm doing, those of you listening in, so I am typing up this signal live right now, and then what happens is the traders in our room get this immediately right now, and I just hit the button, and that just also went out, not in our room, but via our app. So on your mobile device, and then also via email. So all of the signals that go out are live in the market. I mean, it's real time. Everything is real time.
So CNBC just said that their projection for this year is 23.8 billion on Amazon Prime Day sales, and I predicted 25. So we're pretty dang close where we think we'll be here. Those are some big numbers.
I got to keep my wife away from Amazon over the next 4 days.
I'm sure there's some ski boots in the.
You never know.
Here in there somewhere.
You never ever know. All right, we are caught up, and for those of you in the room here, in the OpVol room, the mic is on. You'll notice I am on a live interview right now with my very good friend and founder of Quasar Markets. So we are on a live interview right now. I posted up the link earlier. You can go to the Quasar Market X, Twitter, whatever it is, site to see this live. Quasar Markets is phenomenal, and I am happy to be here with Steve this morning.
Oh, Van Gaal just said Scott just got the signal for Datadog, so I think she's thanking you for that.
Ah, that's Zora. Way to go, Zora. You know what is really satisfying to me, Steve? I'm not trying to pound the table here or anything. I do this because I want to, not because I have to. So, we put out signals, work with our students, and I just got an email from one of my students right now. Just says, "Thanks for the awesome trade." When I see something like that, makes it all worthwhile.
But I think that in a lot of ways, Scott, I mean, none of us, including yourself, I won't speak for you, but I mean, I didn't learn because of myself. I wasn't like me going to the pits or back in the day. I have mentors, right? I had people.
100%. Yeah. 100%. We talk about that all the time. And I think people underestimate how important that is because of all of the free information that's out there on the internet.
Right.
Or on YouTube, whatever it is. But without really someone or a system or whatever it is to really guide you, right? There's so many nuances about trading other than just looking at technicals and say buy here, sell here.
Right.
Exactly. A real, true professional mentor is invaluable. Totally. Same way. One of my best friends to this day was my mentor who brought me into the business 35 years ago. I mean, wouldn't have done it, couldn't have done it without him.
Same. I mean, Jesse Curry Commodities started me out in commodities back in the day. That's how I got in Chicago. And he was Green Beret. He was not a finance person. He was a former Green Beret, and he made me tougher than I was as a kid. I was 18 years old. Said, "You're gonna learn this. You're gonna sit here, and you're gonna sit here with me, and you're gonna learn it." Again, bouncing off the 109 handle there. 109 just cannot handle on Bitcoin here. It just keeps selling there. It seems like there's sellers up there. I just can't find something to make a move here. I'm getting gun shy maybe a little bit here.
So you know what, Steve? That's a really good lesson for people to understand, right?
Yeah.
When it's like this right now, that's going to happen. That's okay. And we all get the juices flowing. We all want to have our skin in the game. We want to be active, right? But so often that leads to disaster, forcing a trade. And one of the things, that psychological part of trading that we teach our students is, when you go through periods of times like this, sometimes the best trade is no trade. And as difficult as it is not to have your finger on the mouse and make a trade, got to do it. And that just comes with experience. And that is one of the biggest downfalls that I see some of our students making, is the need to trade. They feel the need.
Yeah, I have no need to trade. There you go. Definitely says agree with Scott about just
Turn
one
this down
30.
here, one of our other rooms.
Yeah. 1091 now in Bitcoin there. So yeah, I mean I learned a long time ago that the emotions you got to remove them from the trading. It's all about what your gut is saying, but remove the emotion.
And it's not hard, not easy to do.
It's
much easier said than done. There's no question about it.
And that is absolutely true. I still have emotions in trading. And I'll tell you, one of the best things that I did was get a dog. I mean, a dog helps. I know you're a dog lover too.
You know my love for dogs.
Yes, we both have a huge love for animals. And I don't know where Bailey is today. He's usually next to me. Oh, look at Bitcoin just took off.
There we go. Steve, I have to bring this up. I have to, because we're talking about Prime Day. Not sure how many of the listeners know this. When Amazon was first a publicly listed company and options were listed, it was in the late 90s. It was either 97 or 98. And those options were given to the CBOE, Chicago Board Options Exchange. At that time, back in the day, that's how old I am, back in the day, you didn't have multiply listed options, meaning they weren't on the CBOE and the New York Stock Exchange and the Philly and the Amex, and they were only on one exchange until those days of multiple listing became available. So when Amazon was listed, there was literally not one single person on the floor of the CBOE that wanted to trade the options because the stock was so volatile. Mm-hmm. So who do you think was the only trader in the world for 3 months that traded Amazon.com options?
You.
Yep. Literally, I was the only. Anybody that doesn't believe this, you can look it up. You can go to the CBOE and ask them. But yes, that is correct. That is correct. So,
and what was the thought process behind that, Scott?
The thought process was, most at that point, we're talking about, kind of late 90s, before the NASDAQ bubble. And people hadn't seen volatility, implied volatility, trade the way that an Amazon did. People were used to trading National Semiconductor, Coca-Cola, Bank America, stocks that, very, very low volatility. So most traders were afraid of the volatility. Well, I wasn't, because whether you have volatility down in the 5th percentile or up in the 95th percentile, the relationships are still the same. So I was confident that I would still be able to trade volatility. Just like I mentioned 45 minutes ago, said I'm a volatility trader. I don't really care about direction. So I had massive positions on, Steve. There were days that I would literally trade hundreds of thousands of contracts and hundreds of thousands of shares of stock because I was the only trader. But my positions were always relatively flat, meaning delta neutral. So I didn't care about direction. I just wanted the paper flow and to trade that volatility. And it finally got to the point, a few months in, that other traders were saying, oh man, I see what SIB is my acronym. That's my real SIBO badge. I always keep it here grounded. We're going to join it. We're going to join in the fun. We're going to join in the fun. So,
and how long did it take for them to join in the fund? I mean, that's normal, right? That when they follow the leader down the pits all the time.
Yeah. So it didn't take them long. I mean, I had done the dirty work. So people that were then coming in to trade were basically kind of following my lead at the time. But I'll be honest with you, by the time these traders came in, I welcomed it. Normally, we didn't want the competition, right?
Right.
I welcomed it because there was so much activity. I literally, both physically and from an economic standpoint, couldn't do it all myself. So it was pretty crazy. It was really crazy.
President Trump says Japan continues to seek mutually beneficial agreement with us. So looks like I think it's what we're seeing right now in the markets. That possibly the Japan deal is on the table here.
Well, again, I mean, this extension, I truly feel like literally he just got up yesterday morning and said, hey, August 1st is a good day.
And that kind of clarity is really, really rough on the markets. But we like volume. We love volume. It helps.
For us, it's great.
Yeah.
Absolutely. I will take that. I will take that kind of uncertainty any day. Now, when we get into big sell-off mode like we had at the beginning of April, that's volatile, and that's okay trade also. But I'd rather see, rather than the big shock to the system, I'd rather see that gradual uptick in volatility, because for me that is easier to trade than the big shocks are.
Yep. Agreed. All right, we got about 8 minutes now into the top of the hour here, Scott. Ticks down 91. Looks like the S&P and Qs are starting to slide a bit here. Thoughts the rest of the day before we let you go, man?
More of the same. More of the same. I think we need to be cautious. And VIX, I can't believe VIX is down 5% today. That's the spot VIX. Let me pull up the futures curve here because I want to see.
And you can pull up the present on in the middle of your screen. At the bottom of your screen says present. Okay. And you can show your charts if you want.
I will do that. Hang on.
Tick now up 274 here as the markets might be trying to make a run here.
Let's see. Present, share screen.
Oh wow. Akazawa and Basent spoke for 30 minutes according to Japan.
Okay. Can you see my screen now?
I can. I'm going to put an ad at the stage.
Perfect. There you go. So what this is, everybody, and this is a great resource. This is literally just live from the SIBO. It's SIBO VIX data. Okay. And what this is showing here to everybody are all the VIX futures. So what's going on with VIX futures? Well, here's the spot VIX. That's what I was just referencing, under 17 right now. Okay. We are also seeing, though, the VIX futures curve lower, 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 lower.
Right.
So I think it's too cheap, guys. Again, just my opinion. I think it's too cheap. This is a great resource, though. And if anybody wants to follow what VIX futures are doing, this is a great resource. This website right here.
Yeah, and I'm going to pull up as well, Scott. I'm going to try to pull mine up too as well, present my page. And SIBO gives a lot of great data out there. If you don't know, you can see what we're talking about with the curve. He's talking about the forward curve out, contango, meaning that in the future that they're paying up for it, right? So you're paying down in hopes that in August and September, which we don't believe in hope and luck around here, that the price will go up, and it's showing that through the futures.
And that's a normal futures curve, like you said. That's contango. Now, Steve, if you want to do this up above there, you can actually put in a date.
Yeah, got a date.
What the futures curve was like at any point. Put in like April 10th. After the big debacle. I want people to be able to see what the curve was like. Look at that. What does that tell you right there? That's an inverted curve. That's called backwardation. When you see a curve like that, that means the market is in panic mode. That means that people want that protection right here, right now, that short-term VIX, and they're not worried about the future. When the VIX curve is like this in backwardation, that happens about 15% of the time before it normalizes, and it will always normalize. This right here, when you see a VIX curve like that, that's typically an opportunity to buy in the market.
And I'm going to go back many years, 5 years here now for April, and that was back during COVID, and you can see we're at 54. So the backwardation throughout the years has been pretty heavy. So you can see what Scott's telling you. And during COVID is a 55, but if we look at it from the perspective of now, there we go.
This is really a great tool, guys.
There you go. You can see what Scott's talking about, that back in May and June, that now they're thinking that we're going to go, that there is going to be some volatility in the future. And this is another reason why I think the markets are just a little overbought here too, as well. I think people
totally agree with you.
Are buying up. And if you listen to Scott earlier, Scott was saying, no, I'm not buying really July's or August. I'm actually saying, he's saying push it out till September for the VIX calls. So this is what he means. And he's saying, look, there's not a lot of, between here 22.49 and 22.63, there's not a lot of alpha there. So he's telling you that this is a great trade here, and it's backed up by data, which I love. He's not just pulling it out of his behind. He's actually telling you what he's thinking, and he's showing that to you. All right, Scott. Well, that's good stuff, man.
Yes, I appreciate it. And one thing I'm just looking at right here, I think gold just took another tumble here. So GLD is down to about 305. Remember, I've got kind of 303, 303 half on my radar on that one. So that is potentially next up for us here.
Then we have Scott's Prosper Trading Academy room up, so everybody can see kind of how they do it, and you can see on the right hand side the room is moving. It's not it's busy. So
so this is live interaction with the students here. Here are all of the signals through here. I've got my charts. My students are seeing the same things that I am, and we have a lot of fun. We work hard, we play hard.
There we go. And I can't for the life of me figure out why I'm not making any moves here. There's
nothing wrong with that, Steve. You know that. There's nothing wrong with that.
I live with it every day. But I also feel like that when I feel this way with advanced decline up 2,400 and I'm not making a move, I also do feel like maybe I'm not clearly seeing the market sometimes. And when I do that, Scott, I don't trade. When I feel like I don't see the markets, I don't trade.
Can I make a mean and nasty analogy to that?
Of course you can. I expect it as a Cubs fan.
Like Cardinals hitters the other day against the Cubs, not seeing things too clearly.
Ladies and gentlemen, thanks Scott Bauer for coming on the show today. It was really good seeing you. Yes.
Yes.
No, look, it's a Cubs year, man. I like it. Look, I love the rivalry. We all know how it works. It doesn't matter who wins this one. The next one will be the exact opposite. It's just always been that way.
Listen, Chicago sports here, we don't typically get a lot to cheer on. And
I've heard that a lot.
So when something good is happening, we really got to be behind it.
That's right. Vic says Scott is talking about is still slipping here, down 5% here. VIX itself, the volatility index itself, 1685 now, down 5.34%. So if you liked it a little earlier, you like it now.
Yeah, for sure.
We're definitely getting down there to the point where possibly we are getting some good news out of these trade tariffs.
So we are again, full transparency here. I told you we rolled out our July position out to September in the VIX, and our September position is we are long the 25.35 call spread. It's pretty cheap. It's pretty cheap. So that's what you call about having that. That's what you note as having bullets, having that protection. Something happens to the market, that call spread is really going to explode.
Ag Secretary Rollins just said that there will be no amnesty for farm workers from immigration enforcement.
Okay.
I believe that Trump just said that he was for the farmers, that he was going to protect them.
And there's exactly what I mean.
So we'll if there's no workers in the field, the migrant workers that normally pick those crops and help out, is this going to push prices of
Wouldn't you think? I mean, that would be the natural progression. Yeah. Supply chain disruptions, prices higher. I mean, supply and demand. You got to have people out there doing that stuff, and if you don't, that's not a good thing.
Are you
again, here's just another situation of uncertainty.
Right.
And this uncertainty, things like this, even an announcement like this, Steve, that affects the markets, and that uncertainty affects the markets.
Right. Agreed. All right, Scott. 1 minute now, top of the hour. Thanks for showing up on the show today. What a great show today. For those of you who don't know, Scott and I have known each other for a very long time. Zora right now is asking which one are you looking at, Scott, on the VIX?
Zora, the 25-35 call spread in September.
There you go. Yeah, and you can see VXU meaning September. If you don't know this, you don't know those letters, you better learn those letters quickly because they correspond to a month.
Yep.
September. I've learned that since I was 18. And the 25 obviously is the year. So you're learning very quickly futures markets, which is my favorite. All right, Scott, it's 10 o'clock, man. I will see you. And thanks for being on the
Steve, love being here. Thanks so much for having me.
Bye-bye. All right, from all of us here at Quasar Markets, thank you so much for being on the show today. Look, it's he's made 3 good trades. He's talking exactly the same thing I'm saying. Be cautious out there. The markets just don't seem to be finding direction yet. It is in a trading pattern here, and I appreciate everybody there coming on the show today. And we'll see you right back here. We've got some things coming on later today. All right, for all of us, you're very welcome. Thanks, Zora. I appreciate you too as well. Thanks.